Okay, so here's where we get to some of the solutions that you might have to your global business problems. One, futures trading. So you engage in contracts to exchange a currency at a certain rate in the future. So let's say that you're doing your project that right now is worth 100 million euros. You can buy a futures contract that you can get that payment in United States dollars at that 30-day time. So after 30 days, you would be getting the whole amount of your contract, 100 million euros, converted to $50 million in 30 days. Now, obviously, for that type of exchange, you would have to pay. You would have to pay for that. I mean, you have to pay for futures trades. So it does cost you a little bit of money, but you would be sure that you're going to getting an agreed upon rate, and that takes the risk out of doing your transaction. Another tool that global business people, and not even global business, but domestic business as well, options, which are the right but not the obligation to buy or sell a stock at a certain price. An interest rate swap is different companies may have better fixed or adjustable rates. Perhaps you can make a deal if you prefer one exchange rate type versus another. So if you're making, if you can get interest at an adjustable rate that's a competitive adjustable rate, but you prefer a fixed rate, and another company gets a competitive fixed rate, but they prefer the adjustable rate, both companies can succeed if they can work out an interest rate swap. So that's another tool. Another thing that we could use in mergers and acquisitions, is there any way that you can use your profits to operate locally? If you can buy another business out, you're doing business in that country, perhaps you can use that money to operate locally. Global stock exchange markets. This is a list here of different exchanges that exist in the world. This is the I guess top 20, and I have it here arranged in the market value. The top one is New York Stock Exchange. The next one down is Tokyo Stock Exchange, and NASDAQ, Euronext, and it just goes down the list here. You can see that there are stock exchanges in pretty much everywhere in the world. There's an African one, there's South American ones, there's all different kinds, and this is only a list of 20 of them. You can go online and find a whole bunch more that they have that you might not have heard of. Foreign direct investment. Now, foreign direct investment is for long-term projects. What needs to be considered here is that there's two different kinds of FDI. FDI can be either inward, in which you're the host country and you're receiving money for development, or it's outward, in which your country is, or your company is betting or planning to do business in another country abroad. So there's inward and outward. Now, anyone can invest in FDI. It can be a person, it can be a company, it can be a country, it can be an organization. So there's all different kinds of investors who invest abroad. Now, most FDI, a large portion of it, is between industrialized nations. So that means that the United States is a large participator in FDI, both inward and outward, as well as Switzerland, Germany, England. All the industrialized countries have significant FDI inflows and outflows. One trend that is catching on big time right now is the non-industrialized countries, especially in emerging markets. When we talk about emerging markets, again, we're talking about Brazil, Russia, India, and China. Not exclusively those countries, but those types of countries. That also includes Argentina, other Southeast Asian nations, Korea. that are receiving a lot of money for development there. FDI projects usually involve some amount of relinquishment of technology. When an FDI project begins, that usually means a factory is being built or some other means of production. So that host country would receive the technology that's needed to produce that project. Now, that comes with a certain risk as well, in that, will this technology only be used for our project, or is it possible that this technology could be used on other projects in that country as well? So there's a security issue here. You know, how well is this information guarded, and is it going to be protected so that it's not used and abused? You know, a lot of countries don't have the intellectual property rights that United States Americans have, and companies. So that means that when you're doing business abroad and doing these long-term projects, you really need to be sure that it's for the long term and that you're able to commit to that, to the success of that project. So FDI is one area that you know, needs to take a significant, you need to take time and really view what you're doing there. It's not just an exportation deal. This is a long-term investment. Cross-border capital budgeting analysis. Okay, there's lots of budgeting assessments that you can do for your project. Okay, some things you could do: figure out the net present value. Is it worth it to engage in this type of a deal? Look at the rate of return. Look at the equivalent annuity. The real options. Real options basically mean that when you are deciding to go forth with a project, say you have a factory, and you're deciding to go forth with a project in that factory, one thing that you need to consider is that by going forward with that production in that factory, you are losing any kind of money that you could get if you were to sell that factory. So you need to be able to rank your projects based on some kind of profitability index. So it's important to really review all your options when you're considering some kind of engagement, especially on an international scale. When you be investing abroad, you're obviously going to have a certain degree of expenses and time that are going to be surprises. It's not easy to go abroad and start a business, so you have to be pretty confident in your numbers, and you have to you know, put some kind of fat in your budget to make sure that, you know, this is your most profitable avenue to go abroad and to engage in this FDI project, for example, or any kind of project, and rank that against the projects you have domestically, and you know, whatever pokers you have in the fire. So cross-border capital budgeting is imperative when you are considering a move abroad. Okay, country risk. There have been instances when governments have taken ownership of foreign invested projects. It is imperative to assess the risks in your host country and design an insurance policy that covers your vulnerabilities. There are insurance companies that do provide insurance for businesses that go abroad. It's very important to consider those as a security when you are investing abroad. So in case you are investing in a politically unstable economy, or something happens where the government might be overthrown and it takes over your company, you're not out all that money. At least you have some kind of backup. So be sure that, you know, the risk that you're taking on is something that you can live with, and that the returns justify this type of a project. There's a lot to consider when going abroad, and these are some tools that you may be able to use to help you. So thank you for watching. This is the 4th video.